Once all your entries are recorded in the general journal, you then need to go and post them into the general ledger. You can think of the general ledger as nothing more than giant T accounts. So what you see in front of you now is a general journal with a couple entries, not too many. And then if you scroll down, you will see several ledger accounts. So what I did was I went through and alternated the colors so that they're easier for you to see. So this is the cash general ledger. This is the accounts receivable general ledger, equipment, and so on and so forth. When you are looking at the general ledger, you will notice that each account has the corresponding account name number, okay? And some of the accounts already have balances in them. Now the balances that are there I put in red so that you know not to change them, okay? So the process of posting from the journal to the ledger is pretty simple, but students do find it a bit tedious because it is back and forth. So we will not do a ton of this because in the real world of accounting, this is automatically done when you post to a computerized system and you post to the journal. It automatically will transfer it into the ledger for you. But I do want you to go through the process and be familiar with how to post to the ledger, okay? So let's begin. We start with the first transaction on June 1st. We see we have a debit to cash and a credit to capital. What we do is we take it one line at a time. So a couple things to point out that you need to know. You need to be aware of the page number that each of these transactions occur on. So the first 3 transactions occur on page 1 of the general journal, and the second 2 occur on page 2. That's going to be important when we're posting down into the ledger. Okay, so let's go down. We'll start with cash. We'll find the cash general ledger. Here it is. Okay, so we'll plug in the date, June 1st. Oops. So same thing as with the journal, you have the column for the years. Don't worry about the year. I didn't give you enough room in the ledger to do that. So just put the month and then the date. For item, we're going to leave that blank. Post reference. So this is the page number from the journal that the posting is coming from. So like I said, the first entry is posted on page 1. So in the post reference, we're going to put 1. Okay. We then record the debit amount of $70,000. And then this over here is the balance column, or columns, I should say. You can see the T account, right? So here's balance, then there's your T. So you're basically just updating your T account, okay? So we do 70,000. And then to finish this entry being posted to the ledger, we need to go back and fill out the post reference column in the journal, okay? And in the journal, the post reference is going to be the account number that you posted into in the ledger. So for cash, it's 111. So we're going to go back up, post reference of cash. We're going to plug it in, 111. Oops, that's the wrong one. 111. And then now we know that that line of this journal entry has been posted. Okay, so you do not fill in that post reference in the journal until it's posted down into the ledger. I have a lot of students that like to go in and they, go ahead and they do all the post references in the journal, and then they think, oh no, did I post that one? Did I not post that one? That's the purpose of it. Okay. All right. So then for the second part of this journal entry, we see that it is a credit to a credit to capital. So let's go on down and find the capital T account, and here it is. So same thing, we're going to fill in the date of June. And this, however, for whatever reason, this is formatted italics. Don't worry about it. June 1. The page in the journal was page 1. It is a credit of 70,000, so it's recorded in the credit column, including the zeros. And then we update our balance. Okay, and this is account number 311. So we come back up to the journal and we post reference that we posted there in account number 311. And that entry is now posted. Okay, going down, let's do the next one together. Equipment. So on June 2nd, we had a debit to equipment and a credit to cash, $33,000. All right, so we'll start with equipment. So we'll go and we'll find our equipment T account or our equipment ledger account. And same thing, this is going to be June 1. Oh, I'm sorry, this is not actually the first, right? When did this transaction occur? The second. So June 2nd. Post reference is 1 because it's on page 1. It's a debit of $33,000. We update our balance. And then we come back up and we fill out the post reference in our journal of 124 because that is the account number. All right, the next entry is cash. The next part of this journal entry is cash. It's a credit. So we're going to go down to cash. We don't need to put in the month, okay, because the month is already there. We don't need to skip a line. You don't skip lines here like you did in the journal, okay? So this one is June 2nd. Post reference is going to be the same because it's on page 1. Credit, $33,000. And I believe I have it formatted so the commas already come in. Okay, so now for updating the balances, here's where we're going to use formulas, okay? It's going to be equal to the previous balance of $70,000, okay? And then since this is a credit, we're going to subtract it because they're in opposite columns. When they're in opposite columns, they get subtracted from each other, okay? If it's a debit, if the one entry is a debit, the previous entry is a debit, the entry after it's a credit, they get subtracted. If the previous entry is a debit, the entry after it is a debit, they get added. If the previous entry is a credit, the transaction after it is a credit, they get added. So it's when they are opposite that they get subtracted, okay? And it should really always be staying on that normal balance side. So for cash, the normal balance side is a debit, okay? So we press enter. And we see that now our updated balance here is $37,000. We can go up and post ref of 111. All right, let's look at equipment. Equipment, we have a debit of $7,000, and then we have a credit of $7,000. So this is to accounts payable. So this is on June 3rd. Okay, so let's go down to the equipment T account. We're not skipping a line. This is on the 3rd, page 1. This is a debit, so we're going to just plug in 7,000. And now to update the balance, if the previous balance is a debit and you have another debit, you will add them together. And we get 40,000. Okay, come back up. Post reference, and we're done with that line. Okay, accounts payable Melton. Okay, this should just say accounts payable. Let me change that. On yours, it will be changed. All right, so credit to accounts payable for 7,000. So coming on down, accounts payable, June 3rd. It is a credit of 7,000. Go on over and update that balance of 7,000. Okay. Oh, actually, I put the date in the post ref column. That should be a 1, and then this should be the 3. Okay. So let's go up and finish it by posting the post reference of 221 to that entry. And we are done. Now we have 2 more entries to record, and these are on page 2. So when we are filling in that post ref column for these entries, we will be putting in a 2 for page 2. Okay, so the first one is a debit to accounts payable in the amount of $2,000. So let's go down to accounts payable. This happened on the 4th. Post reference of 2. This is going to be a debit of $2,000. And when we go to update our balance, again, it's going to remain in that normal balance side So it's equal to the previous balance, which was a credit, and the next entry is a debit. So we're actually going to subtract them, minus 2,000. And we have an updated balance of accounts payable of 5,000. Coming back up, post-referencing 221. Cash is going to be a credit of 2,000 as well. So on the 4th, post-reference of 2, credit of 2,000. And then we update our balance, so equals the previous balance, the previous ending balance was a debit. We are now crediting the account, so we will subtract the credit and get an updated balance of 35,000. Fill in our post-reference of 111. Then our last entry is going to be a debit to equipment and a credit to a credit to capital, both in the amount of 6,200. So let's go down to equipment. This occurred on the same date of the 4th, and it's also on page 2. And it's going to be a debit to equipment of 6,200. So a debit and a debit are going to get added together. So we take the previous balance and add the new debit to get an updated balance of 46,200. And we post-reference 124. And then a credit to capital of 6,200. Again, same date, same post-ref, 6,200. And a credit won't get added. And you've now finished the process. Oh, wait, no, I gotta go back up. 311. And you've now finished the process of posting your journal entries into your ledger. Now, if you think back to the steps from earlier in the week, you'll recall that there were 3 steps that we were going to do. It was going to be the journal, the ledger, and the trial balance. I said that we would move pretty quickly through the 3 because we have done them all, essentially, just in a different format. Okay, so we can move right ahead and do the trial balance. So what we do is we take the balances from the ledger and post them down into the trial balance. Okay, so let's go ahead and do that. So for cash, we have a debit balance of 35,000. Accounts receivable, there was a previous balance there. We did nothing, but we still need to record it of 1,400. Equipment, we ended up with a debit balance of 46,200. Accounts payable, we ended up with a credit balance of 5,000. Capital, we had a credit balance of 76,200. Drawing, we did nothing, but there was a previous balance, a debit of 500. Income from services, again, nothing but a previous credit balance of 3,000. And wages expense 1,100. Now, if we did everything right, we should be able to auto sum these 2 columns and see that they will be equal to each other. And we are done. Okay, so that is the process of taking journal entries, posting into the ledger, updating the ledger as you go along, and then creating your trial balance.